Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets at this point of time are poised for a range-bound session. SGX Nifty has recorded gains of around 50 points, indicating Nifty to be ranged around that 18,600 levels. Inflation has cooled down to 25 months low in May as food prices have eased. S&P 50 closes at the highest level since April 2022 and US stock futures are flat ahead of key May inflation report in the US. An index of Asian equities have risen. Most of them rather have been up in trade on hopes of a rate pause. Optimism that Fed will pause a decade-long tightening campaign is essentially buoying the sentiment out for Asian equities. Talk about the FII's data. They've sold shares worth around 626 odd crores, and DIIs, they've bought shares again to an extent of around 1,793 odd crore. In terms of FNOQs that we have, we're seeing 80 stocks which have seen long build-ups, and based on the OI percentages, this includes the like of Manapurna Finance, you have Hindustan Petroleum, Ipca Laboratories, Delta Corp and BPCL. Now, 12 stocks have seen long unwinding based on the OI percentages. This includes the like of L&T, ITC, Maruti Suzuki, Bharat Electronics and Aurobindo Pharma. Talk about the 27 stocks which have seen short build-ups. Based on the OI percentages, we're seeing Navin Fluorine International, SRF, Wipro, Aarti Industries and Hindustan Aeronautics, which have seen a short build-up. Well, 68 stocks in total that have seen short covering activity coming in, and this includes the like of Indian Energy Exchange yet again, Coforge, India Cements, Hero Motocorp and Infosys. Now, stocks that are under FNO ban, that has been added. Delta Corp, that's fresh to the list, and what has been retained is Indian Energy Exchange. That's the one which is probably that remains in the FNO ban list, and Indiabull Housing Finance, that too has been added to the FNO ban list for June 13. So these are some of the FNOQs that we have, and just to get going and discuss some stocks and strategies, we have the technical guest with us. We have Rohit Srivastav, the Indian strategist out there, who's going to be taking us through the technical analysis out there for the markets. Rohit Srivastav, founder and strategist, Indiacharts. Good morning there, and sorry for the delayed introduction. I'm going to start off by asking you about your assessment on the Indian equities right now. I'm sure it's an eventful week for the markets, both globally as well as Indian equity markets, some macro data. It's been range-bound session thus far. What do you make out of the markets right now?
So it's really important that we, break up this discussion into short-term and long-term, because otherwise I would be giving differential opinions. Longer term, I think the bottom that we made in March is the bottom for the year. We are probably not going to go below that again. So that's important from an investment standpoint, because whenever we do see a correction and corrections do happen, there will be additional buying opportunities for investors. So that's something to keep in mind while I go over the near-term structure, because what we have seen now is almost a 2-month rally, and at the end of this 2 months, we are seeing the completion of what we call the first impulse or the first 5-wave advance, and usually after that we do sometimes get a consolidation or a pullback. So we are sort of slightly preparing for the possibility from a trade perspective that the Nifty does pull back a bit. The immediate support, of course, is the 20-day moving average at 18,453. We'll be watching if that breaks or not, because if it does, then we can get a further knee-jerk reaction from there for a couple of 100 points more on the downside, and then that would actually be a very good entry point. So that's something we are watching. I cannot put it with certainty that it's going to happen, because when we actually watch what is happening around the world, then we are seeing a pretty strong rally in various markets, specifically, of course, being led by the US, but also emerging markets like Brazil and Asian markets like Japan are actually doing pretty well. But even then, we are seeing some sentiment data reach an extreme. To give you an example, there's something known as the Daily Sentiment Index, which is a survey of traders around the world, and that has touched around 91% for the Nasdaq Composite. So that's really an extreme, because more than 90% is a point where you're saying that a large number of traders, more than 91%, are actually bullish on the markets, and the rest of them, which is around 8-9%, are only bearish. So that is an extreme where you usually would get some kind of a cooling off in equity. So it does look like as we head into this Fed event this week globally, that US equities have run up quite a bit, are getting slightly overextended, and there could be a pullback once the event really is crossed, and surely expectations are built up on the basis of whether the Fed will pause, cut rates, or give some kind of hint on the rate front once the CPI data comes out tonight. So I think all of that sort of gets discounted, and that's where the buy-in expectation, sell-on news kind of flow kicks in. So the main point that I'm trying to make is that despite the strength in global equities, we are getting to a point where it could get slightly overbought in the short term. And in our own market, we are already seeing a loss of momentum in terms of price action in both the Nifty and Bank Nifty. And that pullback could really result in us coming back to some kind of a support from where we can actually get a much more meaningful advance.
Sure. Rohit, I'm going to also ask you about Bank Nifty. It's also remained range bound and volatile, falling around that 45 points to 43,944 odd levels. What do you think would be the next resistance level for this one, and what is also the strategy that you think the investors can now look at?
So there too, I think the immediate support was 43,980, the 20-day average. Yesterday, we did close marginally below that. It's a very thin close below it, so I can't call it a serious break of the level. Then again, the momentum indicators are already in sell mode, so they are actually not showing strength at the moment. So we aren't really seeing a runaway move in Bank Nifty. So if it stays below 18,453, we can dip. 43,980, we can dip towards maybe 43,350. So that's around 400-500 points lower. And that's where we would then think that there's a better entry point even for the Bank Nifty itself.
Sure. And also, auto stocks have been doing well. We're going to be addressing in the stocks and news just in a bit. Zee Entertainment is the one which is expected to be in focus today. Rohit, your comments on that, apart from within the auto basket, what do you prefer? The charts look attractive for Hero Motocorp, or for that matter, Tata Motors. What's your preferred pick there?
So I think autos as a basket, see Hero Motocorp, and let me just mention, we don't really give investment advice. So my comments are essentially opinions on what these stocks are doing on the charts. So we don't really provide an advisory service. But having said that, it's been one of the underperformers or the dogs within the auto basket. I think the strong names have been Maruti, Tata Motors, and maybe an M&M, which did really well even when the markets were falling last year between May and June. And those would be the places where I would hold my focus. And Tata Motors within them was actually flat. It didn't perform at that point of time in May and June, but it's gone through a long consolidation phase. And given its exposure to Europe, where if you look at European equities, they're doing pretty well, I would think that it has a long way to catch up with the auto sector itself. So I think in general, they're good. But then again, I come back to the short-term argument that many of these, so if I just look at the auto index itself, the auto index has moved up quite a bit. The RSI is crossed the 70 mark. It's holding in the overbought territory. I would really want to see the auto index pull back and consolidate a bit before I really make a fresh entry on any of the auto names. So medium to longer term, they do look good. But I would want that pullback to really get a good entry where the risk reward is more favorable.
Sure, Rohit. We're just going to be addressing in the stocks and news and then come back to you after the market opens. But there are a couple of them that we really want to address. First is Zee Entertainment, Inox Wind, Satin Credit, Care. Let's start off with something which is more important and pertinent to the markets. Zee Entertainment, where SEBI has barred Subhash Chandra and Punit Goenka, both of them from holding directorial and key managerial roles. Now, SEBI has passed an interim order after finding that funds were siphoned off from the listed entity. The order comes on the back of investigation into allegation by Yes Bank. There's a possibility that the merger could be delayed on this one, and if the promoter exerts their influence, and Sony withdraws, it's supposed. This is very much a likelihood, and that's going to be really negative for the counter, because that's the word coming in. For most of the shareholders were pretty buoyant about it. We're going to be talking about Zee Entertainment in just a bit, but let's address market opens for you right now. Nifty 50, we're seeing gains to an extent of 0.3% out there. 18,650 level. That's the level that the market right now is sitting at. So it's comfortably sitting above that 18,650 mark. Remains to be seen if it holds on above that level. Talk about Bank Nifty Index overall. That also has been doing well. We're seeing support coming in to an extent of 0.25% for Bank Nifty Index, to an extent of 44,000 odd levels. We're talking about the mid cap and the small cap index out, just to see how broader markets have been doing. Broader markets too are doing well in trade. Nifty Private Bank at this point of time, the sectoral indices that have been holding up. Talk about the mid cap index. We're seeing gains to an extent of 0.4% coming in for mid cap index, and small cap index too. We're seeing gains to an extent of 0.5% out there. Talk about the sectoral indices and the traction. Sure, we discussed in detail. Rohit spoke about auto index. We're seeing gains to an extent of 0.3% for that one. Pharma has been holding up. Gains of more than 0.3% out there for pharma as well. And in terms of other sectoral indices that we have, IT index is doing well, 0.5% out there, and something in the likes of real estate, something in the like of consumption basket, that has been holding intact. FMCG, like we likely addressed, it is doing well in trade, and we're seeing gains to an extent of 0.6% out there. Advances and declines too at this point of time. 36 advances versus 11 declines on the index right now. Realty index has been holding up yet again ahead of the FOMC meet out there, which is going to set the direction in for the markets and in equity markets, which have been eyeing the record high levels now. If you talk about the top gainers and the top losers that we have on the screen right now, JSW Steel and Tata Motors. That's the one that is holding up in green for you. Axis Bank too seems to be participating into the rally. NTPC, Apollo Hospital and LNTC. Beg your pardon, L&T. These are some of the top gainers that we have on the list right now. Talk about the top losers that we have in terms of Kotak Mahindra Bank, Coal India and Tech Mahindra. These are some of the other top losers that we have on the screen. Eicher Motors, Wipro and ICICI Bank too have been beaten down in trade early deals and probably featuring in the top losers list right now. Rohit, I'm going to come back to you and check with you. What do you make out of Zee Entertainment Enterprises? How do the charts look right now? We're seeing quite some development playing out for this one. What do you make out of it?
So I've pretty much avoided that particular stock personally for the last couple of years. It's been through too much of news flow. So usually when there's so much news flow around something, it's very hard to make sense of it till the air really clears up. And I think that's the reason to have stayed away.
All right. Would you also want to talk about Tata Motors, because that's the one which is probably holding up in green and is one of the top gainers that we have on the list right now. We spoke about in detail about the auto index, and sure, you said that you don't make any recommendation, but just from the levels that look attractive on the charts right now.
Yeah, so Tata Motors actually picked up momentum, like I mentioned some time back. If I, give you particular levels, I think supports would be pretty far because the 20-day average is around 533. And on the upside, the recent high that we really made is 576. So in that sense, the risk reward would appear slightly unfavorable because, the 20-day meaning the downside support is much further away than the highs, and that sort of doesn't give you a perfect setup in terms of what we call an entry.
And how about the financial space, the entire banking space? Anything that looks attractive ahead of the FOMC meet that is the outcome of which will be played out in the markets and probably set the direction and the tone for the markets going forward?
So, if you specifically look at the Indian banking space, it has been doing very, very differently from the US banking space because US banks have been troubled. So, if you look at the Dow Jones Bank Index or the KBW Index, both of them were near their 52-week lows a couple of weeks back from where they've just started to recover. And then if you look at Bank Nifty, it's actually hit new highs. So very, very different patterns between the two to really correlate what would happen because of the FMC, FOMC meeting towards our banking sector in general. So I think that's not going to be the key driver. The key driver for banking is essentially, continuing growth in India. So if we continue to grow GDP at 6-7%, then the banking sector continues to benefit. Now within that, like I was mentioning earlier for the auto sector, also we always look at what has been outperforming or where the performance is really shifting. And within banking, I think one of these stocks where performance has shifted clearly positively has been ICICI Bank. So you're seeing that do much better than the earlier winners, which in the last decade were HDFC Bank and HDFC. So that shift is quite visible in favor of ICICI Bank, which is broken out of a 7 to 8 year range. And that would therefore be one of the places I would prefer to look at.
Sure, I mean, Indian economics have more tied up to the financials out there, but it was just in terms of the rate sensitive that I was wanting to know that would an FOMC meet will have an impact overall on the rate sensitive pact as such, which you've clearly ruled out at this point of time. But anything that you like overall, not a recommendation, but just from the chart perspectives out there that you think our viewers can be looking at?
So, rate sensitivity hits a couple of sectors. One is realty. The other is, of course, the autos, which you spoke of, where most of the buying is based on, what the rate is, because people are borrowing to really buy those assets. And therefore, I think the trend of rates in India itself matters more than anything else, which is slowly beginning to point downwards. If you go by the 10-year GSEC, which was at 7.8%, now is at 7%. The RBI is still not moved. I think eventually they will, looking at the inflation data. So definitely it's positive for rate sensitives. I think my main concern has been that we've already had a run up in expectation of that in most of these sectors, which is why I'm probably looking for a near-term pullback to really look at those. But what would I like? I think oil marketing companies are an interesting space. The reason being that oil prices have been under pressure for quite a while. Even after the OPEC did those oil price cuts, we saw a spike and then oil prices started to fall again. So that sort of gives a good input entry to the OMCs, and you actually start seeing performance there. And within those, you've actually seen some good performance by say an Indian Oil, IOC, and you're seeing some consolidation in HPCL for the last couple of weeks. So I think oil marketing companies could be where you could see some momentum pick up.
All right, Rohit. Thank you so much for taking out the time and speaking to us. It was indeed a pleasure chatting with you.
Thank you.
All right, we're going to be addressing in Zee Entertainment a little more in detail. The stock is already, probably cracking in trade. We're seeing 3.5-4% cuts in early deals. There's a possibility of the merger delay after the SEBI has barred the key promoters to hold the key directorial positions, where the fear is that the Sony will withdraw its supports and there is a reversal window. The directors have a 21-day window to reconsider the decision. SEBI has been investigating the potential matter. There's a negative impact probably with the ongoing investigation. Potential merger being delayed is a big negative coming in for Zee Entertainment. The merger without promoter managerial position is going to be another possibility coming in for Zee Enterprises, where the merged entity will have Sony as the majority stakeholders. This is going to be a very influential move overall for the board, and it will have potential benefits because this arrangement could provide several advantages. This would separate the merged entity from the ongoing legal battles. It would reduce the legal risk and the uncertainty, and the inclusion of the professional CEO could also enhance the credibility and the stability of the merged entity. So net, if Sony comes as a shareholder on the Zee board, that seems to be a positive. But if the merger gets delayed or called off, that's going to be a great negative for the markets right now. Zee Entertainment is not doing well. We're seeing cracks to an extent of 3.5 or 4% Hero Motocorp, well, it's a positive day coming in for overall auto index, but CLSA at this point of time has downgraded the counter, and the target price is to an extent of 2,708 rupees. It says very limited potential upside, successful implementation of strategy and recovery in entry segment. That remains the key out there. The aggressive plans in premium segment seems promising, but the competitive intensity is high. Inox Wind, the company boards approved the merger of Inox Wind Energy with itself. Now, Inox Wind will be issuing in 158 equity shares for every 10 equity shares that have been, in India, Inox Wind Energy shareholders have been holding. So there's a swap there. Satin Credit Care, where there is a board which is going to be meeting in to consider fundraising on June 15. It's going to be doing in that by, probably debentures on private placement basis. So that's the word coming in overall on stocks and news per se. But there are too much. We've got a lot to discuss when it comes to overall the fundamental story. There is macroeconomic indicators, FOMC meet tomorrow, and Ajay Bagga, the market expert, is joining us right now to take us through what does he make out of the macros for the Indian equity markets. Good morning there. FII seem to be supporting in the markets right now. Macros also seem to be a bit in favor of Indian equity markets. FOMC sure will probably, you think, could be a trigger point for the markets and will set the tone and the direction for Indian equity markets going forward?
Very difficult to say. What we are expecting today is that the US CPI should come down to 4.1, 4.2 kind of levels. So we are expecting a lower level on the US CPI. What does that set up the Fed for, the FOMC for? We are expecting a pause. But the more hawkish players like Neil Kashkari have been at pain to say that don't look at the pause as a full stop. It's just a skip and there will be a rate hike again if we see it warranted by the data. So markets will be on edge. Mostly it will depend on two factors. One, the press conference, what does Powell say? And second, the dot plot. So how high will the Fed take the rates from here? And if at all, are there going to be a couple of more rate hikes, which is the street consensus? The bond markets are factoring in that we are done with the rate hikes. My personal opinion is that you don't need to hike rates more in the US because with the QT also happening and the bank credit going down, those two will have an impact. And I think they can wait now. But the Canadian and the Australian example of hiking after a pause has, put this cat among the pigeons that even if there is a pause tomorrow, which is a very high probability, roughly 70% plus probability that it's a pause tomorrow, but July hike is still at 50%. So it's an even probability. A lot will depend on Powell's press conference and the dot plot. So how high do they take the rates and when do they anticipate rate cuts? So the street was talking of December rate cuts. It's gone down from 3 rate cuts by December to 1. I think the Fed will be at pains to say 2023, we don't see the need for a rate cut. And that could make things a little volatile.
Sure. I mean, sure, that's really going to set the tone different for Indian equity markets. But with perspective of all this in view, how do you think one should look at financial space right now and something in the basket of the entire rate sensitives? Sure, it's a very broad question that I'm posing out here in terms of the real estate index, in terms of the banking index, in terms of the auto index. With all that in perspective and the background, what do you think has more potential right now?
All three are going to do very well in India over the next 1 year. The RBI rate cycle is done with. They can't officially yet say that, and liquidity is still strong. The third factor is basically we don't know about the monsoon, the El Nino effect. So RBI has stayed on the fence by keeping it as withdrawal of accommodation. Right now, they are mopping up liquidity from the market, especially with the 2,000 rupee notes, 85% of them coming back into the banking system. There is a boost of maybe 1 lakh crores to 2 lakh crores of liquidity flowing into the banking system in the very short term. So RBI has stayed on withdrawal, but mostly the rate hike cycle is done for India. Our anticipation is that come October or November, we will see the first rate cut by RBI. inflation is going to undershoot the 5.1 number that RBI gave. So rate sensitives will do very well, be it banking, be it all types of NBFCs, autos, real estate, all will get a booster. Ranking within them, of course, banking, you have to stick with banking. It's the largest segment in India. And as the economy progresses, banks as the funders of that growth will stand to benefit. And they are in a Goldilocks spot where their NPAs have come down, balance sheets are strong, and there is a credit demand in the economy. So though economy will slow down by 0.5 to 0.7% in FY 2024, that still will mean about a 5.5 to 6% growth for the year in real terms, and nominal terms about 10.5 to 11%. So you can see bank credit growth of about 12 to 15%, which should be enough to deliver good returns. Autos are coming back. We have seen a good year, and now we are seeing the rural income also starting to play. So as two-wheelers kick in, autos will do even better. And third, being real estate, again, that's after a 7-8 year down cycle that we have seen a 1 year of good cycle. A lot of cleanup has happened post-RERA, post the shock to the entire real estate space. Nearly 95% of unorganized or smaller developers have been wiped out. And the ones who have survived, have good balance sheets, ability to raise funds, and ability to execute. The inventories are down to 12 to 16 months from as high as 60 to 72 months. So very little inventory overhang. That normally means we are set for a 3 to 5 year real estate good cycle, and the real estate listed players should do well.
All right, so that's the word coming in on the rate sensitives. First is, of course, the banking space, and then, of course, we can look at the auto, and then probably the real estate. That's probably the pecking order that Mr. Bagga has suggested at this point of time. But I'm going to stick to the El Nino impact because we spoke about it in just a little jiffy, right? I mean, we spoke about it, we touched upon it briefly, where you spoke about, the recent development suggests that the center is considering an cap on sugar exports till the first half of 2024 ahead of general election. Sure, sugar has one point of time been in a very sweet space. We've seen the rally. But with the El Nino impact playing out, your assessment on the rural recovery and the impact that will come in for the FMCG names which have done well in the quarter gone by, and B, overall your view on the sugar stocks right now?
Yeah, it is a problem because they are sitting on surplus, and it's been a great season. So they are sitting on surplus. Now, as the new season starts in a couple of months, the government is very clear that charity begins at home. Not only sugar, but even wheat export controls have been announced, that the ban on wheat and rice exports is staying. Only the export varieties of rice are given case-by-case license. So quite clearly, the government is afraid of food running away and causing issues in a pre-election year, and that has a direct impact on the voting pattern. So I think this will be very micromanaged, and it will be a dampener for the sugar stocks. And I think this year, there will be a very tight control by the government on the food stock prices, be it cereals, be it pulses, be it vegetables or sugar. Sugar being a very central consumption item, I think you will see the government pushing hard to make sure adequate supplies are released whenever the prices shoot up. So till now, what was happening, there were twin drivers of sugar. One was the ethanol story, which they are benefiting. As much ethanol as they can produce, the oil companies are willing to take. So that was a good story. The second was the export market, because the export prices have been rising. And El Nino has an impact not only on India, but on Brazil, South America, on the west coast of the US. It causes flooding somewhere, it causes drought somewhere. So clearly, the agricultural commodities will have a tough time this year. El Nino is very much there. It's not that it's not going to come. Our meteorological department and the private players take some time and they hedge their bets before they call it. But you look at the Australian, Japanese, Korean, and the US prognosticators, they are all calling for an El Nino this year. So it has set in. It will have an impact on the rainfall patterns and on the food prices, the food production. So what the government has done is it's keeping enough stores domestically to ensure that the food inflation doesn't go up. Overall negative for the sugar sector.
Negative for the sugar sector. Also, I'd want to understand, sure, you said that you think at this point of time ethanol story is played out enough and more for sugar space. And also that in perspective, you think more regulatory challenges and changes will come in ahead of the election. And because of that, you think investors are better off staying off the entire sugar space right now and the rally is done with?
I would say yes, because sugar remains a very political sector. It gets influenced by state politics. It gets influenced by central politics. So as we have seen on this export ban, ethanol story is a long-term story. So as much capacity as you can put up, the government is able to blend it. We are nowhere near our capacity, and especially if you start talking of 20% blending for the whole country, it's a huge runway. It's just that the capacity is not there. So it will have to be that how well do the sugar companies manage, and can they bring in other sources of generating ethanol only, or is it only their sugarcane, feed that goes into it? I think those will be the big things. So nearly 3-4 companies are looking very good on that ethanol story. But this overhang of not being allowed exports, and frankly, if you look at it, I don't think till May 2024 now, you will get an export license for sugar, because the government will be very careful that the inflation is kept in check, especially the food inflation. So in that kind of a scenario, I don't see exports being allowed, and the ban will stay not only on sugar, but also on rice and on wheat.
Mr. Bagga, you said you just like 2-3 stocks within that space. What are those stocks? And also one theme that you like the most, and within that, the picks that you think investors should be looking at.
Yeah, picks I can't give because I'm not SEBI registered, so I'm not allowed to give particular stocks. But sectors-wise, happy to talk. I think you should look at banks, both private and public sector. And I think the big theme from here through the next 1 year is going to be quality. What is the big thesis? We see a slowdown, not a recession in the US and in Europe. So a slowdown, maybe the US GDP goes down by 1.5%. So it will flatline for the next few quarters. But 2024 is looking very good to us. So unlike the previous 2 elections, what we are expecting is that the markets go weak into the election and then they pick up post the election. If we get a single party government, somebody is able to make a stable government, that will be welcomed by the market. So, but overall, the domestic situation is very good. The economy is doing well. Inflation is in control. Normally, expenditure into the economy increases in the pre-election year. The beneficiaries are normally the infrastructure companies, the industrials, because a lot of capex gets done by the government. Government expenditure rises. And then nearer the election, the FMCG companies start doing very well as money comes into the economy. The third factor for India is the rural economy is coming back post-COVID for the first time. We've had a bumper harvest again, and all the welfare measures that the government has taken has meant that the rural population has been able to save. So you are going to see rural demand pick up by this festive season. So I would say banking, industrials, infrastructure companies, cement companies, real estate, auto. These would be my top sectoral picks, but stick to quality. Right now, most of India is investing in small cap, mid cap. That's good till it lasts. But when the music stops, those are the first to fall, and they fall very sharply. So I would again urge that stick to quality, stick to the bigger names. In a year like the one that's coming up, I think those will do much better than the small and mid caps.
All right, Mr. Bagga, we'll leave it at that. And thank you so much for taking out the time and speaking to us. Well, Mr. Bagga suggests rate sensitive and industrials as the preferred pick. Within that, quality names. City India has come up with a strategy report and has made several changes to mid-cap picks, where it's added in ACC, Apollo, Corobindram and Delivery. PB in FinTech too has been added. These are now the new age companies which have been added to the mid-cap space, and has removed in Ashok Leland, Crompton Consumer, IGL and Phoenix overall, and Sritate, MGL, Devyani and Gateway District Parks. These are some of the changes which have come in on the India strategy mid-cap space that Citi has recommended to keep an eye out on these names. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned in to moneycontrol.com and Moneycontrol app.